Hi everyone. In this video, I'm going to answer the question, which one of these three stocks is the best dividend stock to buy? So this is for passive income investors, for dividend stock investors. If you're interested in generating passive income, this is the video for you. I'm going to judge these companies across four different metrics, starting with dividend yield. So let's get right into it. The three stocks that I'm going to evaluate here for dividend stock investors is Verizon Communications, Raytheon Technologies, and Coca-Cola. Verizon offers a robust dividend yield of 6.44%. Raytheon has the lowest of the three at 1.63%, and Coca-Cola is in the middle at 2.94%. The next metric I wanted to look at is the company's earnings per share and its dividend per share, looking at the trailing 12 months. And what I want to see here is how much of the company's earnings are they paying in dividends? Because if you pay too much of your earnings out in dividends, that can be detrimental to the business. And if you're paying more than your earnings in dividends, then that's not sustainable, right? It's like a household spending more than it's bringing in, right? That means it's spending out of its savings or it's borrowing. It's the same for a business. If it pays dividends higher than its earnings, that means it's coming out of savings or it's borrowing, and that's not sustainable. So starting with Verizon, earnings per share in the trailing 12 months of $5.06, dividends per share of $2.58. So about half of its earnings paid out in dividends. That's a solid amount. That's not too risky. That appears sustainable, especially when you consider that its earnings per share has been rising over the years. So good position for the dividend for Verizon stock. Next, Raytheon Technologies, earnings per share of $3.52 in the trailing 12 months, dividend per share of $2.16. So about two-thirds of its earnings per share paid out in dividends. The company's got good prospects over the next few quarters as militaries worldwide are ramping up their spending, increasing their defense budgets as the world is becoming a little bit less safe. Finally, Coca-Cola trailing 12 months earnings per share of $2.40, dividends per share of $1.76. So this is the highest portion of dividends to earnings compared to the other three. Although Coca-Cola is benefiting from reopening economies, Coca-Cola's got a greater share of business of market share in away from home channels. Think things like restaurants, theme parks, movie theaters. Coca-Cola's got a strong position in those areas. So as we've been going out and spending more money away from home, Coca-Cola's been benefiting, and you can look at the rise in its earnings per share since bottoming in 2018. It's really been soaring, and that might persist over the next few quarters. The next metric I wanted to look at is quarterly revenue growth. And starting with Verizon growing at 3.48% in its most recent quarter. And that's about what you can expect from Verizon over the next few years is low to mid single digit revenue growth. It's in a mature industry. It's not adding very many new cell phone users. It's adding incremental devices onto cell phone plans, and that could be incremental revenue driver. Raytheon, I suspect, could experience the best revenue growth out of these three in its most recent quarter, 6.15%. But looking out over the next 6 quarters, it's between Raytheon and Coca-Cola, I suspect, to experience the best revenue growth. Coca-Cola 6.98% revenue growth in its most recent quarter. It had growth above 30% in one quarter as economic reopening really provided a tailwind for Coca-Cola's sales growth. Finally, I wanted to look at these companies' valuations judging by the forward price to earnings ratio. And looking at this metric, Verizon is the cheapest, trading at a forward PE of 8.42. Raytheon is in the middle at 17.42, and Coca-Cola trading at a forward PE ratio of 21.44. 4. So Coca-Cola being the most expensive out of these three, and Verizon being the cheapest out of these three. However, if I had to pick one of these three stocks as the best dividend stock to buy right now, I would say Verizon stock would be the best dividend stock to buy. It's got one of the highest dividend yields out of the three, and it's got the lowest valuation out of the three. And perhaps that incremental device addition could be a tailwind for Verizon over the next few quarters for revenue growth. All right, so that's all I've got for this video. As always, I really appreciate your viewership, and I hope you'll see me next time for another video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.